Boys, I'm going to be going over how I made $773 across my 5 Top Step Express accounts. Proof here. Going into the day. All right. So as you can see right here, actually the hourly shows it better, but as you can see here, last Friday we end up edging these lows, leaving this sell side liquidity right here, having this big move up, and then we end up tapping this 4-hour gap, or this 1-hour gap, sorry, and then getting a lot of rejection down, pretty much confirming that price more than likely wants to come sweep out these lows before either continuing higher or lower. So once I saw this market close, I was like, all right, we're going to leave this hourly gap opened. So if price ideally trades into this, we get some sort of rejection and some sort of displacement back towards this drawn liquidity. I'm for sure taking this trade because it's so clear, it's so obvious, and that's what I did. So essentially, all I wanted to see was Asia open bullish, as you can see here. So we end up opening bullish, tapping this hourly gap. We got this nice 5-minute displacement candle right here. I didn't enter off the displacement candle. I just set a limit here just to have my R, because I risked $500 per trade. And so I risked 3 micros on here, put my stop at the protected high, because obviously you do not want to see price trade into this protected high, stop me out, and then deliver. That doesn't make sense. So what did we do? We end up tapping, or having this nice displacement. We run up, don't take out this high. This is why stop loss placement is very important. If I would have put my stop here, I would have got stopped. If I would have put my stop, at this 5-minute gap, I would have got stopped. You know what I'm saying? So like, make sure you just put your stop where it is, bro. Like, it's not that deep. Making an extra $200-300 by getting stopped when your trade and your overall bias was correct is kind of just stupid. So just do the right thing. So we got the displacement down. Ended up going break even at this 5-minute internal low, which is just a 1-minute internal low, right here. As you can see, because obviously once price comes and sweeps out this internal low, ideally I don't want to see us trade back and reject off of it. I just kind of want to see us flush towards the draw. So that's what I did, went break even there. And yeah, just targeted the full draw on liquidity, being these relative equal lows on the hourly right here. So overall, pretty clean and simple trade. As you can see, I do not rock too many confluences. Literally just draw on liquidity, displacement, and literally that's and a protected stop. It's literally all you need. You don't need to overcomplicate this. Yeah. And then simply, some things I could have done to maybe take a better entry would maybe just wait till price trades back up into this, and then once we get that like second displacement leg down, maybe closing through this 5-minute right here, maybe take your entry here. Maybe you can rock your stop there. I would still put it at the protected high, but again, I'm not going to be too weird about it. But I thought this was a really clean and simple trade, very obvious. You really want to capitalize on the days where your draw on liquidity is obvious and you don't have to guess, and it's just very clear. Like, ideally, like, you have to think about price in this way. Does it logically make sense for us to have this big move up? Honestly, this whole move up didn't really make sense because we didn't really sweep out any lows, right? We were kind of just running off nothing. And then we end up tapping this hourly gap, having this straight rejection down, clear displacement towards the strong liquidity. Rejection tells everything in the markets. And once you saw this rejection, we're clearly not going higher, and we want to go see the sell side liquidity, which I was correct, and my draw on liquidity was correct. I had a protected stop, and my trade ended up running to take profit. So pretty simple.